Welcome to the bull versus the bear, where we break down both sides of the story for the market's hottest stocks.
All right, today we're tackling a big one, pharmaceutical giant Novo Nordisk. Now, these guys have had a truly meteoric rise, but after a run like that, everyone's asking the same thing. What's next?
Okay, so here's how we're going to break it all down. We'll kick things off with a quick look at how Novo Nordisk got so huge. Then, we'll dive into the bull case, all the reasons to be optimistic. After that, we'll flip the coin and look at the bear case, the potential red flags. And in the end, we'll leave it up to you.
So, for the past few years, Novo Nordisk has been, well, an absolute titan. Their blockbuster drugs for diabetes and obesity haven't just been successful, they've completely rewritten the rules of the pharma industry.
And the engine behind all this success? It's a class of drugs called GLP-1s. Now, these things are incredible. They basically mimic a natural hormone to help control blood sugar and, the big one, promote weight loss. The demand has been absolutely unprecedented, truly global. But here's the million-dollar question, the very heart of the bull versus bear debate. Can this momentum possibly last?
All right, let's dive into the bull case first. And honestly, it's a really powerful argument. It all boils down to one thing: incredible, sustained growth that's, well, it's pretty hard to argue with.
I mean, just look at the top-line numbers. Overall sales shot up a massive 15% in the first 9 months of the year. Now, for a company this big, that's not just good growth, that's huge.
But here's where it gets really interesting. The real driver behind that number? The obesity care segment. It is absolutely exploding. We're talking a staggering 41% jump in sales. This right here, this is the rocket fuel for the entire company.
And this table really puts that into perspective, doesn't it? The obesity care part brought in almost 60 billion Danish kroners in just 9 months. And yeah, the diabetes segment is still bigger overall, but look at the growth rates. 10% for diabetes is totally dwarfed by that massive 41% from obesity care. I mean, it's clear where the real action is.
But the bull case isn't just about what's happening right now. It's about what's coming next. The company is pouring money into its R&D pipeline. They're making smart acquisitions, like Acro for its promising liver disease treatment, and they're pushing their next-generation weight management drugs into late-stage trials. This tells you they are definitely not just sitting back and counting their money.
Okay, but for every bull, there's always a bear, right? So now, let's flip the script and look at the reasons for caution. The bear case says, hold on a second. Despite the incredible story so far, there are some clouds on the horizon. Things like slowing momentum, rising costs, and some really intense competition.
And the first red flag? It actually comes from Novo Nordisk itself. They've trimmed their own sales forecast for the year, lowering the top end of their guidance. Now, it might not seem like a huge change, but for Wall Street, a move like that is a signal that maybe, just maybe, the days of easy, explosive growth are winding down.
And a big reason for that caution is competition. It is absolutely heating up. In the super important GLP-1 diabetes market, Novo's global market share has dropped from over 55% to under 50% in just 1 year. That's a serious decline, and it shows that rivals are definitely starting to take a piece of the pie.
And at the exact same time, their profitability is getting squeezed. Look at the gross margin. It's fallen from almost 85% down to 81%. What that means, in simple terms, is that their costs are going up faster than their sales. It's eating into the profit they make on every single thing they sell.
And a huge reason for that profit squeeze is a one-time charge of 9 billion kroner for restructuring. That's a massive number. The company is streamlining operations and cutting around 9,000 jobs. You don't make a move that big unless some major internal shifts are happening.
And look, you don't even have to take my word for it. The CEO's own statement connects this restructuring directly to market pressures. He's not mincing words here. He says they need to compete better in increasingly competitive markets. For anyone on the bear side of things, that's basically a direct admission of the challenges they're up against.
So there you have it. Two really different stories, both pulled from the exact same set of facts. Let's just put them side by side and recap the main points.
Okay, on one side, you have the bulls. They're pointing to that explosive 41% growth in obesity care, strong overall sales, and a really promising R&D pipeline that could create the next big thing. But then you have the bears. They're looking at the company's own cautious guidance, the shrinking market share, squeezed profit margins, and those huge restructuring costs. And they're saying, not so fast.
So the question is, where do you stand? Which argument do you find more compelling?
Is that obesity growth engine just too powerful to bet against? Or are the threats from competition and rising costs a serious cause for concern? Are we seeing the first cracks in this amazing growth story?
We really want to know what you think. Head down to the comments and tell us which side you're on, bull or bear, and more importantly, why. We read every single comment.
And hey, if you enjoyed this breakdown, make sure to subscribe to the Bull vs. the Bear. We do this for all the market's biggest stocks. And you can check out our analysis of another market giant right here. Thanks for watching.